Hello traders and future millionaires, here we are again with yet another video where I'm gonna teach you the power of the breaker block, but I'm gonna teach it in a very unique way compared to the other video that I had made. This is also a video that I made on ChrisFX for those of you who are coming from my other channel, ChrisFX, and for those of you who just discovered this video from YouTube and you just joined the SMC Trader, then stay here for the backtesting, but I will briefly go through the strategy one more time. I highly suggest that you click on the top right of your screen right now and that you watch the rules from my other channel, ChrisFX, but if you just joined, I will just go through the rules one more time. Here I am on GBP USD, and first of all, let's suppose I will show it in a downtrend. In this occasion, let's suppose that we have a movement such as this one. What is the breaker block first of all? Let's say that here we have an order block, okay, exactly right here, or you can call it of course a support area, but I will explain, do not worry. Let's suppose that here you have your order block, which would be the last down candlestick, and let's do that. Let's say red, okay, like that. This is the last down candlestick before this up move. You have a bunch of candlesticks here, and then let's suppose that we have other candlesticks that created this leg right here, and those candlesticks of course should be bullish candlesticks, okay, bullish, another bearish in the middle, let's say something like that. Okay, you understand what I mean until here. Let's also do that, and let's do it red as well, of course. Let's suppose that you have a move exactly like this. Okay, so the last down candlestick, if I zoom in before this up move took place, is this candlestick, this exact candlestick right here. When this candlestick is not being tested at all from this retracement, when price made it back here, we didn't have a single reaction. This is what I mean by that. So we didn't have a reaction such as this one and then price went. We just penetrated with a single candlestick. And you might tell me, what does a single candlestick mean? I will tell you this is time frame specific, of course. Here we are gonna explain it on the 15-minute time frame, and this is where we're gonna be doing our back testing. But it works on all time frames. You can apply this strategy on all different time frames. So supposedly this was a candlestick which was so impulsive, as I show it right here, without giving you a small reaction inside this zone. And it penetrated with a body. It doesn't matter if the body is small, I mean smaller like that, or if it is like that. Now, what happens in this occasion? In the past, I told you that you should wait for a full retracement and take the trade from the breaker block. Now, this might happen, but this might not happen as well. And I will explain what I mean by that. Let's suppose now, let's build these candlesticks. Let's say that this is our move and this is the candlestick that broke below. Okay, so this retracement might not happen slowly, such as in this occasion, activate you and then price leave. Many times this is gonna happen instantly. What do I mean by that? Many times the very next candlestick will just come inside this area. It will wick, it will give you a wick, in other words. So let's create a very small wick right here. Okay, it will wick inside this area and price is gonna go instantly. It might even do that. So sometimes price is not gonna come back afterwards to just activate you into the trade. It's gonna do it instantly with the immediate candlestick. The immediate next candlestick of this bearish candlestick in this occasion activated you. So this is why you should be having a pending order, okay, a sell limit order in this occasion, exactly at the bottom of this breaker, which is this untested order block, and the stop loss right on the top of this breaker. And then you can either target, of course, this area, or I would suggest that you go for large targets, at least 4 or 5 to 1 reward to risk or target other areas of the daily time frame. So this is the whole point of this video, and this is what we're gonna be backtesting here, because many times, sometimes I should say, price is not gonna do you the favor to come back again or just come back and activate you. It will just wick instantly into this breaker and it is gonna go. So now that we did that, what I will be doing first of all, because I really like my drawing, to be honest, I will probably take a screenshot of this thing and I will probably add it as, let's say, let's do it like that, transfer the whole thing all the way down. This would be a beautiful thumbnail. I'm not quite sure if I'm gonna put this in the thumbnail, but I'm gonna take a screenshot of it. There you go. Okay, now what I will do, I will first of all place this here as well. What I will do, I will start with backtesting, and I will start doing the backtesting from, let's see, from the last occasion where we had something like that. So I'm gonna go backwards. Of course, in this occasion, you might tell me that you see what is happening, but it is absolutely fine that we see what is happening. I'm not here to prove anything to you. I am here to show you what I want to show you. So what I'm gonna show you here is a couple of examples. We're not gonna do 2000 trades. You have to do the work on your own, but every single example that we see, we're gonna be taking the trade. So let's begin and see where we have our first example. The lowest movement here that created this impulse is from here until here. The highest point, which is your breaker, would be this candlestick right here. You see this whole candlestick. So you would instantly place a pending order right here with a stop loss right below this breaker. Now, for targets, what you can do, we can be closing, let's say, 50% at 1-to-1, so this is risk-free, and then we can target areas from the daily. So the 1-to-1 has been hit. Here, let's go to the 1 hour, for example, to the hourly time frame, or you can go instantly in this occasion, hit those areas of liquidity for an 1.6-to-1. Let's go for at least a 3-to-1 for the rest. Let's go here. We have closed half at 1-to-1, and here we have lost the rest. So this is a break-even trade. So this is a break-even. Let's go down to the 15-minute time frame again. Now, of course, the next trade should be going exactly right here with a stop loss above this area, but we don't know if this is gonna be playing out. Now, this strategy is gonna, here is the next, actually, the next situation, occasion. You have to be taking the most recent, and the most recent is exactly right here, guys. So, if we are to take every single trade without bias at all, now the most recent change of character is this change of character right here. Did we break with a body without even the slightest, let's say, reaction from this area? We didn't have the slightest reaction. Yes, we did. Where is the trade going? It is going exactly right here. This is now your candlestick, this highest green candlestick before this down move. So the trade in this occasion, you can be taking exactly right here. Okay, this is the most recent move, guys. And if you get activated, you will be closing half at 1-to-1. You got activated here. Okay, and you hit your 1-to-1 instantly. Now, next targets. Next targets, since this is the last move, you can go all the way up here for a 6-to-1 reward to risk. Now, we are standing exactly at 1.8-to-1. So you have closed half right here. We don't know what the rest is gonna do. If it comes all the way back, it is a break even. Now, let's move a little bit backwards and let's check out if we have another scenario such as this one. This is a marginal one and it could be a loss because you could be taking your trade from here, exactly right here, and you would have been stopped out. Okay, I'm just showing you examples so that you can go back in time and backtest this strategy. What about this one? Here, from this candlestick, did we have a reaction? Actually, we didn't. This is another break even as I see it, because there you go. This is your candlestick. Did we hit the 1-to-1? This is the question. After that, yes, we hit 1-to-1, then we got stopped out. Another break even. Let's move forward. Here, tricky example. Here we had a very slight reaction, so this wouldn't qualify, unfortunately, but price would leave. What do I mean by that? I mean that here we had a reaction from the highest candlestick. If we wouldn't be having this reaction this week, we would be taking the trade exactly right here with a stop loss right below this area, and this would have played perfectly fine. Let's check out more examples and let's find nice relevant examples. Okay, this would be, let's see, here I see a couple of examples. Yeah, so if we are to play again every single movement where you're gonna be having more losses, of course, if you do that, then you would be placing a trade on the lowest point here, which would be this point, and you would be having a loss. Now, later on, look what happened right here. You break below this area with a body of a candlestick, you see, with a body right here. I extend that to the right. There you go. Your pending order theoretically would go here with a stop loss right above this area. Okay, look, this went up to 5.4 to 1 reward to risk. Of course, you don't know that. You don't know if this is gonna go up to 5 to 1 or whatever. You close half at 1 to 1, and then for the rest you can target a fixed, let's say 3 to 1 or 4 to 1, let's say, or 5 to 1 even. I suggest that you go for high RR for the rest of the trade, because this strategy is gonna have more losses, of course, rather than wins. Here, as I said on my other channel, we also came back one more time into this breaker, but this whole thing could have happened instantly. Do you see? With this candlestick, instantly, with this wick right here, this wick. So this is the point of this video. This many times is gonna happen instantly. If you are in front of your charts, that's good. Close half at 1 to 1 reward to risk. Look for how much this went. Again, I don't know for how much the trades are gonna run. I'm not a magician. But this is up to you to make a strategy on what is your preferable, let's say, risk management plan. This went up to 13 to 1 reward to risk. So you might be a maniac, for example, you might close half at 1 to 1, and then you might be targeting a 10 to 1 for every single trade, or a 5 to 1. If you would be targeting a 5 to 1, you would be having a total of 3% win here and 3% win here, and then you would have break even, a loss, and 2 more break evens. Okay, let's check out if we have something similar. Beautiful. Here, let's check out this one. Let me, of course, in retrospect, guys, I know, yes, you can say that in the comment section, Chris, this is all in retrospect, and I'm not claiming that if I would be trading that in live, let's say, action, that I would be having the exact same wins as I'm showing you right here. I just want to show you this beautiful strategy. Okay, this is your candlestick. Now, you might get activated instantly. This is my point. Instant activation. There you go, and price leaves. It will never come back in this occasion, I think. At least I think, yeah, it never came back. 1 to 1, you closed half. Let's say that now you are targeting a 5 to 1 for the rest. As we said, let's make a strategy like that, let's say, together. I know that the concept works. Oh, there you go. It would be worth in this occasion for the past trades to target for the rest at least a 10 to 1, to be honest. Let's see for how long this played out. How long, how far did it go? Yeah, it went up to a 24 to 1 reward to risk. Yeah, this is very optimistic. Absolutely, that's why it is up to you to create a plan. Here, this is not very nice as a candlestick. Let's check out here though. Here, a trade could be going here. I don't know if this will be a win. This penetrated this area. I'm not quite sure if I would be getting this one because the most recent movement wasn't this one, but it was this one. But it is not very impulsive as a break. If we would have taken the trade here from this breaker, we would have lost. If you would have taken it from here, you would have won. Now you will see that the most recent breaker in this occasion would have been this one right here. I extend that to the right, I extend that to the right, I take my trade from here, but this is a loss instantly. Now, more food for thought for you. If I take you at the beginning of this movement where this whole FVG area is, look at our breaker, which is this one, okay, this one right here, with the stop loss right below. Let's see, I think this would have been a break even with those rules. If you close half at 1-to-1, this wouldn't have been a break even, and also this previous example that I showed wouldn't have been a break even. I was mistaken, it was right here actually. Let's show this one. So you are placing the trade, you are closing half at 1-to-1, you are not moving the stop loss, so this would have been another win, guys. My apologies. Okay, here the very same thing, you wouldn't be moving the stop loss. This would have played out all the way, all of those three. This would be a loss only right here, and here you would be winning and winning and winning. Here, do you see something similar? Okay, here you can say that my breaker is this one and I would be having a loss. I will say okay, but here this is the highest point, stop loss right below this area, closing half at 1-to-1 just to manage risk, even though as I see it, this is suboptimal. You shouldn't be closing half at 1-to-1. You see that those trades go for almost always at least a 5-to-1, so you are losing RR if you do as I say. It is preferable not to close partials. Okay, amazing, spectacular strategy, all in retrospect of course. Let's check out another example. Here you would be having a loss. Here would be your breaker. Okay, you would be placing the order here, you would be having a loss. This right here, this would be the most recent movement, let's say, if you would choose this one, but this you never got activated instantly, because the point of this video is for this candlestick right here, let's go back in time, to come back and activate you instantly into the trade. Okay, this didn't happen, or almost instantly. This is a combination, because you will tell me, Chris, you showed us a bunch of examples where you didn't get activated instantly, correct? What I want to say is that you should be placing your order instantly. So once you see this thing right here, let's say, you are moving towards the upside here, you see a break of structure with a full body, you see that, without even the slightest reaction. So your breaker is this highest candlestick, as I'm teaching it right here. You place your order here, stop loss right below this area, at 1-to-1 you close half, so you should be placing your order instantly. There you go. Here it took a while until you got activated, you close here half, so now you are risk free, you are going for a 5-to-1, let's say, or whatever you have tested for the rest. Let's see, here you would be stopped at break even. It is that simple, guys. There are a bunch of examples that we can be going through. Let me show you yet another example here that I liked. This would be a loss as I see it. I can see a couple of losses right here. This would have worked on the short term for a break even, of course. So there is a bunch of things that you can do, and if you go ahead and backtest this thing a lot, you will see that even the old breakers can act very nicely. So if we consider that we have a bunch of liquidity down here, as you see, because we have those almost, let's say, equal lows, okay, almost equal lows, What we have below this one, we have a fair value gap, and I will explain what I mean. So we have this fair value gap. What else do we have, guys, here? The highest point, let's delete this FVG, the highest point, which is this point that price just penetrated without the slightest reaction with this huge candlestick. Let's extend that to the right. And let's go ahead and place an order, let's say here. Of course, you need to test those concepts with a stop loss right below this area. There you go. This is something that you can do. It did reach up to 6.3 to 1, way more actually. In total 8 to 1 reward to risk. This is the strategy pretty much, and hopefully you find this strategy very interesting, because I do find it very interesting. You can trade it however you want it, and if you want to learn way better rules than those ones, or rules that you can combine also with these strategies and increase your winning percentage, then I suggest that you go ahead and you click on the link down in the description or in the comment section and join one of my exceptional services. Or you can of course join the copy trading program, where you don't need to do anything. I am trading my capital and your capital, and we just split profits. For that, you don't need to pay anything. Furthermore, subscribe to the SMC Trader for more free educational content, and of course to my other channel, which is the larger of the two channels, my main channel, ChrisFX. This is gonna do it for today, traders. The SMC Trader signing out.